Hey everyone, welcome to another deep dive.
Excited to be here.
Today we're tackling this book called The Little Book That Still Beats the Market
Yeah,
by Joel Greenblatt. And I mean, who doesn't want to beat the market?
right.
So we're going to break down this magic formula that he presents
Yeah, it's really interesting.
for picking winning stocks and hopefully making all our money work harder for us,
Yeah,
whether you're just starting out or you've been doing this for a while.
exactly. And what I really appreciate about the book is how he uses these relatable examples to kind of demystify this sometimes complex world of investing.
Mm,
So right off the bat, he introduces us to Jason,
right.
this sixth grader with a phenomenal business selling dumb at school.
I like Jason already.
Yeah, right. So he buys, those packs for 25 cents.
Yeah,
And then he sells each stick for 25 cents. So pure profit,
same here, kid.
Yeah, entrepreneurial spirit for sure. And then he poses this question to the reader. He's like, okay, imagine Jason wants to sell you half of his gum empire. How much would you pay?
I'm already hooked. I feel like we're back in the schoolyard wheeling and dealing.
Yeah.
But there's this like underlying, serious financial wisdom kind of tucked into this gum story.
Exactly. It's about figuring out how much is a business actually worth.
Right.
And then he introduces this concept of earnings yield,
Okay.
which is super important for understanding investment returns.
Mm-hmm.
Essentially, it tells you how much profit a company makes
Okay.
for every dollar that you invest.
So in Jason's case, like for every dollar I give Jason,
Right.
how much gum can he buy and therefore sell?
Yeah, how many sticks of gum does that turn into, essentially?
Got it.
And a high earnings yield means you're getting a lot of gum
Yeah.
for your buck.
Okay, so high earnings yield, good. We like that.
Absolutely.
He also talks about this thing called return on capital.
Yes,
That one sounds a little bit more intimidating.
it does, but it's actually pretty straightforward.
Okay.
Return on capital is really about how effectively a company uses its profits
Okay.
to generate even more profit. So going back to Jason.
Yeah.
What if he takes his profits and buys more gum?
Yeah.
Or he opens up new gum stands at other schools,
Clever.
and those investments keep making him money. That's a high return on capital.
So it's like, is Jason reinvesting his profits smartly?
Yeah.
Is he growing his little gum empire, or is he like blowing it all on candy or something?
Exactly. It's all about how effectively a company utilizes its earnings to fuel future growth.
Okay, I'm starting to see how these pieces fit together, but here's the thing.
Yeah.
Investing can feel risky.
Oh, for sure.
Like, not all businesses are, as straightforward as Jason's gum operation.
Right.
How do we know when an investment is worth the risk?
Right. How do we avoid getting caught up in the hype or, making emotional decisions?
Yeah, because the stock market can feel like a roller coaster sometimes.
Absolutely.
Yeah.
So to help with this, the book introduces this brilliant concept called Mr. Market.
Okay.
This was actually created by the investing legend Benjamin Graham. Picture Mr. Market as this overly emotional character
Okay.
who shows up at your door every day.
Like a door-to-door salesman.
Yeah, kind of. But he's offering to buy or sell you shares of businesses.
Interesting.
And his prices are all over the place. They're totally driven by his mood swings,
Okay.
the news of the day and just the general frenzy of the market.
So he's kind of like a gambler, or just really impulsive.
Yeah, maybe a bit of both. But the key takeaway here is that Mr. Market's prices
Yeah.
are often totally irrational in the short term.
Okay.
But in the long run, they tend to reflect the true worth of a company.
So we need to see through his theatrics.
Exactly. Don't get swept up in his daily
Oh,
drama.
because on the fundamentals.
Yes.
Is that where this magic formula comes in?
That's where it shines. Yeah, it helps us sort through all the noise and find those real deals.
So it's a tool to help us avoid getting caught up with Mr. Market's crazy antics
Exactly.
and make, more rational decisions.
Yes, and just 2 + 2 always equals 4. This formula relies on two key principles
Okay.
that we've already touched upon. High earnings yield and high return on capital.
This is where I get a little skeptical, though. Is there really a magic formula
Right.
that can consistently beat the market? I mean, what's the catch?
Well, the book is actually very upfront about the formula's limitations.
Okay.
There are two main flaws that you need to be aware of.
Oh, boy. This is getting good.
Yeah, buckle up.
So no magic wands, no guarantees. I'm sensing a theme here.
Yeah, right. No tooth fairies on Wall Street.
Okay, so what are these flaws that I need to prepare myself for?
So the first one is this. The magic formula, it's not some, get-rich-quick scheme.
Okay.
It takes patience, a long-term perspective. You got to be willing to ride out those ups and downs.
So we're talking about planting a tree and watching it grow,
Right, exactly.
not like digging for buried treasure,
Not a quick buck.
Okay, long-term thinking, got it.
Yeah.
What's the other flaw, though?
Okay, so even if the formula does help you beat the market, it doesn't guarantee profits.
Okay.
The market as a whole can fluctuate.
Right.
And those bigger trends, those are going to impact your portfolio.
Yeah, that makes sense.
Even if you've picked amazing individual companies.
It's like a tool for outperforming the market, but not a shield against, the market risk itself.
Exactly.
But here's the question that's been in my head. If this formula is so great,
Yeah,
why isn't everyone using it?
right.
Wouldn't that kind of ruin its magic?
That's a question a lot of people ask, and the book actually tackles this head on.
Okay.
So Joel Greenblatt, he's gotten feedback from investors over the years,
Mm-hmm.
and it's really interesting. The formula's biggest strength, that long-term focus,
Yeah.
that's also its biggest turnoff for a lot of people.
Really?
Yeah, people are impatient.
Right.
They want quick wins. They get scared by, those short-term dips.
I see.
The magic formula requires a different mindset.
So it's more about having the discipline to stick with it,
Yeah.
even when you're, seeing those flashy headlines or
Right.
hearing your neighbors brag about their, crazy meme stock wins or whatever.
Well, exactly. It's about playing the long game.
It's a marathon, not a sprint.
Absolutely.
Okay, so that makes sense. But here's another thing.
Yeah.
Can you kind of cherry pick stocks from this list?
Mm-hmm.
Avoid the ones that seem risky.
Yeah, that's another common question.
Because I've definitely thought about that.
Right.
Like, I like the formula suggestions, but maybe this one over here feels a little iffy.
Yeah.
I'm going to skip that one.
It's tempting.
Yeah.
But the book actually cautions against that,
Yeah.
trying to outsmart the system.
Okay.
No one can predict the future.
Right.
And what looks risky today might end up being a huge winner.
So we're trusting the process, not trying to micromanage it.
Exactly.
Okay, I like that. And that kind of brings us to this idea that you mentioned before.
Yeah.
No tooth fairies on Wall Street. I knew it wasn't a fairy tale land or anything.
Not
What
like
does that really mean?
So it's a metaphor for the realities of the financial world.
Okay.
There are no guarantees.
Right.
No one's going to hand you profits.
Yeah.
And a lot of the expert advice out there
Oh, yeah.
can be pretty misleading.
Okay, so be informed.
Yeah,
Do your research.
absolutely.
Don't just follow the herd.
Right. Be your own advocate.
Okay, good advice.
And speaking of advice, the book talks about common pitfalls for small investors,
Okay.
especially those just starting out.
Yeah.
For example, stockbrokers, they often prioritize selling you products
Oh, yeah.
that benefit them.
Right.
Not necessarily your financial goals.
I've been there.
Yeah.
It can feel like they're speaking a different language.
Yeah. And you're just kind of nodding along, hoping you're making the right choices.
Exactly.
It's important to understand those incentives.
Mm-hmm.
The book also goes into mutual funds.
Okay.
They offer diversification, which is good,
Yeah.
but they often struggle to beat the market.
Oh, really?
Yeah, because of fees and just the challenges of managing those huge portfolios.
So even though they're marketed as this easy, hands-off way to invest,
Right.
they might not actually be the best option.
Not for outperformance, no.
Okay, then there's hedge funds,
Yeah.
more exclusive, higher stakes.
High potential for profits,
Right.
but usually out of reach for the everyday investor.
So not really a solution for, the average person trying to build their portfolio.
Right.
What about index funds? Those are pretty popular these days.
Index funds are a solid option if you want to match the market's average return,
Okay.
but they're not designed to beat it.
So if we're really aiming to beat the market, especially if we're not, financial wizards spending all our time analyzing spreadsheets,
Right.
this magic formula could be a good place to start.
That's the argument the book makes, and it's pretty compelling,
Okay.
especially when you consider, the alternatives and all the potential pitfalls out there. It's a surprisingly accessible approach.
Yeah, I like that.
Yeah.
This has been really fascinating. We've covered a lot of ground here,
Yeah, we have.
going from, sixth grade gum entrepreneurs to
Yeah.
Wall Street, high finance.
That's all connected.
It is. It's all connected. So as we wrap up this deep dive,
Yeah.
what are the big takeaways here? What do we really need to remember?
I think if we zoom out a bit, it's really about changing how we think about investing.
Okay.
It's not about, gambling or trying to time the market.
Right.
It's about understanding businesses, finding those that are undervalued, and holding on for the long haul.
Okay.
This magic formula, it's kind of like a treasure map,
I like that analogy.
right, guiding us toward those hidden gems.
But even with a map, you still got to do the hiking right.
Right.
It's not just about, plugging numbers into a formula
Right.
and then, sitting back and waiting for the riches to roll in.
There's still work involved.
Yeah.
Researching those companies, really understanding their potential, and being honest with yourself about, how much risk you're comfortable with.
So it's like we're getting this superpower,
Mm-hmm.
this magic formula, but we still have to train,
Absolutely.
hone our skills, and learn how to use it effectively.
It's a tool to empower us, not to replace our judgment.
That makes sense.
Yeah.
But it also makes me wonder, now that I know this formula exists,
Yeah.
can I resist the temptation to tinker with it,
It's hard.
to second guess its recommendations?
That's a great question, and it actually brings us to a final thought for you all to consider.
Okay, hit me.
Knowing this formula exists, how do you feel about the possibility of underperforming in the short term
Okay.
for the potential of much greater long-term success?
Interesting.
Are you comfortable with that trade-off?
It really depends on, your own individual risk tolerance,
Exactly.
your investment timeline, and your belief in, the principles behind the formula.
Right. There's no right or wrong answer.
This deep dive has given us a new framework.
A new lens.
Yeah, a new lens through which to view the world of investing.
And now it's up to each of us to go out and explore,
Yeah.
research those companies, think about your own financial goals,
Right.
and see how this knowledge fits into your own journey.
It's like we've unlocked a secret door.
I like that.
And now we get to choose which path we want to take.
That's a great way to put it.
And that's what I love about these deep dives.
Yeah,
They spark curiosity, they challenge our assumptions,
absolutely.
and they give us the knowledge to make, more informed decisions.
And who knows?
Yeah.
Maybe you'll find yourself explaining the magic formula to a gum-filling sixth grader someday.
Uh-huh. I love that image. Thanks for joining me on this deep dive.
It's been a pleasure.
Until next time, may your investments be wise, your curiosity insatiable, and your financial future bright.
Here, here.
Happy exploring, everyone.